It's particularly timely and delightful to be able to introduce our county commissioner, who was just reelected last year, by the way, to his third term from District Number 5, Jim Howell. Let's give him a warm Pachyderm welcome.
Thank you, Carl. You're welcome. So, I get made fun of by some people like Carl, like Kevin Smith, who just thinks I get so wound up around some issues. And this is one of those issues I think we all get wound up around. This is a really hot topic. Let me just say up front, I don't know that I'm going to change your mind about anything. That's really not my goal today. My goal is just to expand some understanding, maybe a little bit of education about some tax things that you may or may not know. Some people think they know, and then they find out they don't know. I've learned that sometimes people get elected to offices and they don't even know what a mill levy is. And to me, that's surprising. But I'm not surprised that the people in the world out there don't really know what a mill levy is, because it's just kind of a nexus term. But you know, property taxes is just one type of tax. There's all kinds of taxes. I lived 3 years in England. You know, they had window taxes, hose taxes, TV taxes, you name it. They had unbelievable numbers of taxes. And so we talk a lot about, you know, different types of taxation. We know that Kansas, we do have property tax and sales tax and income tax, and we have some excise taxes, things like gas tax, cigarette tax, liquor tax, and on it goes. There's excise taxes also. And so one thing I've noticed, especially this year, is there's a lot of discussion in Topeka about moving, shifting our tax policy one way or the other. And I'll just say up front, and I hope you agree with me on this, the problem really hasn't ever been revenue. The problem's always been spending, right? Thank you for that. And, there's a debate going on right now in Topeka about whether we should charge local sales tax on food. And so it's got me thinking about tax policy. And that's not the only thing going on in Topeka. They're talking about changing to a single rate for income tax, changing whether or not Social Security is taxed at $75,000 or going to be $100,000 or whatever it's going to be. And of course, they're taking Laura Kelly's idea, and they're going to hopefully. They think they're going to lower it down to 0% sales tax this year. And so along with that came an idea that they're going to cause local government to give up sales tax on food as well. I'll talk more about that in just a few minutes. In terms of Kansas, we are a high tax state, no question. And if you look at how much government we have a lot of government. And I've wondered, why is that? If you guys follow Facebook or not, you guys can go on my Facebook page and see a little chart I put out there. In fact, I have it I'll get to that slide in a few minutes here. But our public education has taken such a huge part of our state taxes and local taxes. You have to understand that we are a bit of an outlier on public education funding. We know that 8 states have no income tax. It's Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, and Wyoming. And we know that 5 states have no sales tax on goods. That's I understand that's Alaska, Delaware, Montana, New Hampshire, and Oregon. And then we have 5 states that charge sales tax on food, even though they don't have sales tax from the state level on food, which is an interesting thing. They do allow locals to levy a sales tax on food. That's Arizona, Colorado, Georgia, Louisiana, North Carolina, South Carolina, I guess 6 states. And so you see a wide spectrum of different types of taxation. I'll just say that. And everyone can look at Kansas and say, we're really high on property tax, and we are. There are states out there that are much worse than Kansas, and many of those states that are worse than Kansas don't have income tax or sales tax. So they rely on property tax. And again, if you want to own a lot of property, but you don't want to make a lot of money and you don't want to spend a lot of money, that might be a great state for you to retire in, okay? If you want to make a lot of money and spend a lot of money, maybe you want to live in a state that doesn't have sales tax or income tax. Every state out of 50 has property tax. Hawaii actually is the lowest property tax, surprisingly, but they have other taxes that are just going to sock it to you. So for me personally, I care about the total tax burden. I don't know that I care personally as much about what type of tax is the most egregious. A lot of people, you say, what about taxes? What do you think about taxes? They'll say, I hate property tax. And that almost comes up very quickly in Kansas. We hate property tax. Then I ask them, and say, well, would you like to see us shift it over to consumption tax, more sales tax, to lower rates of property tax? A lot of people will say, I don't know about that. Not so sure that's what I want. I just want less taxes. Some people will say, sure, I think that's a better form of taxation. And then you might say, what about income tax? Would you rather see more income tax and less property tax? There are, and I'll get into this in just a few minutes, but there are a couple of state programs that are based on sales tax, where the state has funded over the years to lower property tax. And so the state levies a sales tax, and they use that money to buy down property tax in local governments. They haven't funded those programs, at least one of them since 2001, one of them since 2003. I'll get to that in just a minute as well. At the end of the day, I don't know that I personally have a preference on which tax is the worst or best tax. I don't like any of them, honestly. But here, let me reiterate what I just said a little bit differently. The government is not here to control you. It sounds like that. When you use the word government, it's a very heavy word. It's like the word is we're here to control you and manage your life for you. We're going to govern you. And in reality, government is here to serve you. And so this is your government, and your elected officials need to be tuned in to what the electors want. We need to fine-tune government to what the electors want them to do and nothing more. And whatever we do in government should be efficient and effective. We shouldn't waste your money, your precious property tax dollars, or any other tax dollars for that matter. So we want to make sure we are very careful to protect your dollars and make sure that it does good things that you want us to do. And so the premise of good government, if there is such a thing, is we tax just enough to do the things you want us to do, and we do a great job, and we don't waste your money. So, the question is, are we there, or is government really fat with lots of waste? You guys can study that sheet. I'm not going to talk about it just yet. You guys can look at it before I get to explain what that is. It's going to be towards the end of my slideshow. The question is, are we inefficient? Are we doing the things you don't want us to do? And that's really a good judgment question. And then the issue of tax fairness. We talk about taxes, and really underlying the issue of tax discussion is what is fair. What's the best way to get tax dollars to government, and what is fair? Is it truly fair? And I'm going to just step out there and say one thing about property. Let me say two things about property taxes. Agree or disagree? Again, as much as I hate property taxes, here's one thing that's good about property taxes, if there's such a thing as anything good about property taxes. Number one, you're keenly aware of what government costs you. When you write that check and you grit your teeth and you hand that check over and send that check into the government, you know what government costs. And I would say that most people, when they get their paycheck, look at the amount of money went into their bank. They don't look at the taxes taken out. They rarely look at their pay stub. And when they file their income taxes at the end of the year, they say, how much money am I going to get back from the government? They rarely actually think about how much money they just paid in taxes. And so income taxes, people don't really pay attention to what they're paying to government. And sales taxes, I promise you, not one person in this room has any idea what you pay in sales taxes over a year. We have no idea what's going on with sales taxes. It's kind of a hidden tax. If you buy a brand new vehicle, you might see a huge sales tax cost on that one receipt, and you think, man, that's a lot of tax. But most of the time you go to the Quick Trip, you go to the Dillons, and you spend $5 here and $10 there and $8 here and $3 there, and you don't really think it through. And so at the end of the year, you have no idea what you paid in taxes. But with property taxes, at least you know, when you write that check each year, you know what government costs you. And that transparency and that awareness of what government costs you is a good thing, actually. It is a good thing. The second thing I'd say is good about property taxes, if there's anything good at all, is they are flat. If you have a small amount of property or a whole lot of property based on the appraised value, then the assessed value, and the mill levy for that jurisdiction, you're going to pay a fair share. I'll argue that it's a fair share. I don't like let me say up front, based on constitutional principles of property ownership, I think it's the most unconstitutional form of tax of all. The right to own property is in the Constitution. and you have to pay ransom to your government to continue to own that property. We'll come take it from you, okay? So I don't like that. But again, that ship has sailed long before I was even born. We've been doing property taxes. The question is it fair? Well, it gets back to one issue, and that is, as the tax appraiser, has he done his job reasonably, or is he doing something wrong? And that's really what we're here to talk about today. I got a lot of slides. I'm going to go through these really quickly. So I hope you guys can read this. If you can't, I'll try to help you out. But people, let me just start off with what is a mill levy? It's a Latin term. I won't read the Latin term there, but it means basically $1 of tax for every $1,000 of assessed value. So think about this. If you have a $100,000 structure and its assessed value is $100,000, then 1/1000th of that would be your tax. So let me look at this another way. Let's say you have a $100,000 home. The residential assessment rate is 11.5%, and there's 10 assessment rates in Kansas. They're in the Constitution itself. So you want to change an assessment rate, like HCR, I think it's 5009 or 5006, I forget which one it is. There's a proposal by Democrats this year in the Kansas House to change the Constitution, to shift it from residential 11.5% down to 9%. And if that was to pass, we've not talked about spending yet. We're just talked about who pays what. And I'll tell you that what that would do is that would shift the burden primarily over to commercial. And as you know, businesses don't pay taxes. Those costs are borne in the products and services that they sell. And so at the end of the day, they become less competitive. So we have a very delicate balance of assessment rates in Kansas. I don't want to meddle with it. But HCR 5009, I think that's the right number, would change it from 11.5% assessment rate on a residential property down to 9%. So the people who, bear in mind, the majority of people we talk about in the state of Kansas, the voters, most of them have houses. They might clamor for that. That's a great idea. And the minority voice out there is the commercial property owners. They don't have as big of a voice. So we're going to just move that line in their direction. And that's like all tax debate. Everyone generally thinks that I'm being unfairly treated. I'm paying more than my fair share. I should have some kind of a break in my taxes. I want to pay less and somebody else should pay more. That's the underlying discussion of what happens when you talk about tax debate. And so let me just make an example. You might say, well, I'm a veteran. I am a veteran, by the way. I'm a veteran, so I want to have some kind of a tax break because I'm a veteran. And so I want to have talking about registering 2 cars for free in the state of Kansas. Okay, that's a discussion going on right now in the state of Kansas. Who's going to pick up the burden of government if that was to happen? Everybody else, right? If you're not in the exemption, you're getting piled on by everybody else. So anyway, just one thing you have to remember here, it's a simple math, I'm just going to talk about residential primarily today. But for residential, it's 11.5% assessment rate. So whatever your value of your home is, take it times 11.5%. That's your assessed rate. And take that times your mill levy, which is, again, I pay like 144 mills, so it's 0.144 times my assessment rate. That's how I calculate my tax burden, okay? So don't get lost in the math. It's really very simple. If you want to talk about this later, I'll explain it again. All right. There's the assessment rates. Again, commercial is 25%, agricultural 30%. There's actually 10 different rates there. I'm not going to read them to you. You can read them yourself. The county clerk calculates the mill levy. I know we have debated, I think Carl, where are you? Carl would love it if we could calculate the mill levy for the county clerk, but we don't get to do that. We pass a budget, and then the county clerk calculates a mill levy that generates the dollars we need to actually make that budget perform. So all we do as elected officials, we pass a budget. But the budget we pass, we know, is based on a theoretical mill levy and based on the assessed value that comes from the appraiser. So we know a target number we're trying to build a budget under, and of course then the process is the county clerk calculates the mill levy, and then the county treasurer sends out the tax bills, and that's kind of the process. So the appraiser, the treasurer, and the county clerk work together to make this entire system of property taxes work in Sedgwick County. The key dates, we're actually, and the reason I wanted to hit March 16th today is because we're about halfway through our appeals process. I mean, your opportunity to request an appeal, you're halfway through. Notices were mailed on March the 1st, and by the end of this month, your chance to appeal your taxes this year are over. Okay, so this is your one and only opportunity to appeal your taxes this year. And you'll notice August 25th, governing bodies certify budgets to the county clerk So we pass our budgets, all local governments pass budgets in August, and then they calculate the tax burden for each property taxpayer, and they send out the tax bills. That's how that works. This is a really wonkish chart. I don't want to spend too much time on this, but one thing I wanted to point out, Wichita says, we haven't raised our mill levy in 27 years. If you want to know where their line is the, oh goodness, I have to see it here. The blue line. The blue line is Wichita's mill levy. It's not flat. They'll tell you, it's in the news, oh, we haven't raised our mill levy in 27 years. What happened? What's going on there? Well, the county clerk calculates a technical adjustment to the mill levy after the appeals processes are complete, and then they have to recalculate the mill levy to generate the dollars that government needs. And so there's usually some technical adjustment. They use a technical adjusted mill levy to build next year's budget. Notice the red line down at the bottom there. And that's the Sedgwick County mill levy. It was down around 28.5 mils. It shot all the way up to about 31.5 mils, roughly 31.3 mils, and dropped back down to 29.3 mils. And that's where it's been for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 years. It's flat. That's pretty flat. What's going on there? Well, we actually passed a resolution that says we're going to target a mill levy. We're going to disregard technical adjusted mill levy from the county clerk. We're going to go back to a target mill levy, and that's how we did that. The other two lines on there is your property tax dollars. You notice there's two y-axes on this chart. Left axis is dollars. The right axis is your mill levy. So on the left side, you'll see the black line and the red line going up, and they're actually almost parallel with each other if you look at them over time. And they go up and down a little bit based on assessed value. And again, it's a combination between assessed value and mill levy to generate those tax dollar numbers. But generally, they're going up. They're certainly not flat. And Senate Bill 13, a couple of years ago when they passed Senate Bill 13, it said, if you collect more dollars than you did the previous year, then you're exceeding the revenue neutral rate. And the only way to really to keep the revenue neutral rate down, if the assessed value goes up, you're going to have to lower the mill levy to keep the revenue neutral, if that makes any sense. I think that every large jurisdiction in the entire state of Kansas they exceeded the revenue neutral rate, and that includes Sedgwick County. It's a very wonkish chart, but I guess my point is there's a lot going on here. And okay. So the appraiser, I'm not going to defend the appraiser, but it's a process box. He's supposed to do his job, and he's not supposed to be political. His job is not to create revenue for local governments. His job is simply to appraise properties according to fair market value. And fair market value is what would it sell for on the private the real estate market. So one of the things I always ask people, I'm going to show you my house in just a minute. One of the things I always ask people is forget how much your property changed this year. Forget that for just a minute. But think about right now. What's the appraiser say your house is worth right now? Would you sell it for that? And almost everybody says no, I wouldn't. I would sell it for more if you give me an honest answer. If you say yes, I would be glad to sell it for, the appraiser says the number is actually more than I would sell it for, then you're probably a good candidate for an appeal. But if you, like me, are going to say, well, my appraiser says my property is worth quite a bit less than I think I would sell it for in the free market, then you would have a hard time appealing that tax. I don't want to frustrate you. You certainly have a right to appeal it. I want to encourage you to appeal it if you think you've been overvalued. A lot of people are focused on the percent of change. In other words, you look at it, my property changed 20% this year. My property changed 25% this year. I didn't do anything. I didn't improve my property. I didn't add on to the house. Why is it 25% increase? And the answer is normally they were undervalued before and they're just catching up, they think. Now maybe the appraiser makes a mistake. If he makes a mistake, that's why we have an appeals process. Okay, so I would encourage anybody who thinks the appraiser has overvalued your property to please make an appeal. But I would be less, and I'll just tell you this right now, the appraiser is not interested in the percent of change from last year. So it changed 50%, it doesn't matter. It only matters what it is today versus the fair market value that you would be able to sell that property for. That's all that really matters. And I know that's disappointing to some people, but that's just the way it works. Okay. Residential property owners, you have 60% of the tax burden. So when we pass a budget, 60% comes from housing, okay? One thing that's caused our housing to go up in value quite a bit is we had a pretty hot market in 2022. In fact, this chart shows this is number of days on the market. And the purple line down towards the bottom and the blue line, that's 2022 and 2021. Number of days on the market on average between April and June was 3 days. I sold my house this last year and I had 9 offers in 1 day, and I sold at $25,000 above my asking price. Okay? By the way, $100,000 above what the appraiser said it was worth. Okay? Median price, sales prices are obviously increasing. This is Sedgwick is purple, Johnson is blue, and you can see those numbers are going up. Shawnee is yellow, so they're all kind of parallel with each other. But median sale prices are going up. That's from 2018 through 2022. And does anybody doubt this is true? I mean, y'all sense this is true, right? Anybody bought a house or sold a house this last year? You know this is true. The housing prices are going up. They're going up because there's a shortage of housing. There's labor costs are more, material costs are more, repair costs are more, and on it goes. And so if you want to build a house today for the same price you would have built a house 4 or 5 years ago, you're not going to get the same house. It'll be much smaller. Or if you want to have the same house, you have to spend a lot more money to get the same house. And this is not rocket science. This is, I think, anecdotally, everybody knows this is going on. This is a key slide here. So after the 2022 appraisal notices, this was actually out in the media, but let me just explain this slide real quick. I'm going to again focus on residential. They have what you can say, well, how do I know the appraiser's doing his job correctly? Well, let's be clear. The property appraiser for Sedgwick County works for the Property Valuation Division in Topeka and under the Kansas Department of Revenue. They actually don't work for Sedgwick County. And it's unethical or even illegal, potentially, if I was to tell that appraiser how to do his job and say, you know, Mr. Appraiser, why don't you increase those values a little bit? We could use some more money in our budget. That would be illegal to do that. I have no right to control that appraiser. He is independent and he reports to PVD under KDOR. But PVD takes properties that are actually sold. In this case, I think there's 216 properties. Now, Mark Clark actually has a bit of a rebuttal to this slide. He says, however, they took these 216 properties from the early part of the year when property values were going up rapidly from January through June. So he's done another internal sales ratio study using as many properties as he can get his hands on through the entire year. And I'll show that slide to you in just a minute. But at the end of the day, what this slide is saying to you right here is taking the actual sale prices of properties compared to the appraised values of those very same properties, total those two numbers up and then divide them by each other, he's at 76.6% of actual fair market value. So that means a house that should be at $100,000 according to Mark Clark, he said it's worth $76,600 on average. He's undervaluing property across the board. I just described my house a minute ago. He undervalued my property by quite a bit. Even though I just bought a house, my new house is also undervalued. I don't know why. I have no idea. I'll explain to you. I'll show you that to you in just a second. But he is undervaluing property according to PVD by about 23.5%. Okay? Okay. This is what he did. This is the internal ratio report. He did this since that other chart was made by PVD. This is our own local office taking in as many properties as they can. And you notice he targets 95% fair market value. In 2023, he's about 93%. What happened? Well, the second half of the year, housing values kind of stopped. Kind of stopped growing. And as a consequence, we take in the values over the entire year, this number got more reasonable. So let me go back one slide here. So as a consequence of that, the average property owner, residential, once again, let's talk about residential, 80% of property owners had a 10% increase in their value. And that's hard to stomach, okay? And 1% of the properties had a decrease, an average of 17%, and the other 19% had no change. So I said, well, wait a minute. We're 76.6%, and you increase it by 10%. And if you add all those together, it's about 9%. So you had a 9% correction from 76.6%. We're 23.5% too low, and you added 10%. It seems like you didn't bring it up enough. I mean, it was just a question, right? Well, that's why that second chart was more important, because when you look at the second half of the year, it shows he actually did his job better. He actually corrected by 10%. Again, it's a huge number, but it brings us above that 90% threshold. He's supposed to be above 90%. He targets 95%. He was at 93%. So that's actually pretty good. I think in a sense, he's proven himself. He's done his job correctly this year. Here's a summary of those changes. So if you go back 2023 through 2014, this last year, again, it shows 80% of the properties had a 10% increase, 1% of the properties had a 17% decrease, and you can see that going on down. So going back for the increase, the red column, that's the increase column, is 10% this year, 7% last year, 6% the year before that, 6% the year before that, 4.5% the year before that. All the way down, and the bottom of the chart shows 3%. So every single year, he's had 22% increase, had an increase, 15% had an increase, 53% had an increase, okay, all the way up. On the decreases, on the right-hand side, we had about almost even. We had some properties going up in value, some properties going down in value, about equal, okay? But really, if you look at that chart carefully, I would say from approximately, probably from 2016 and on, we've had consistent increases in property. So if you look at your property tax bill, you will see that. Most of you will see that. The question is that realistic? Is that fair? Well, think about the free market, what's going on. This is my own personal residence, okay? I just bought this house, but this is the history of that particular home that I own right now. They break it down into land and improvements and then total. I highlighted the yellow column as the total. It says my residence is worth $301,600, and over the 10-year period, it had an increase of 39.5%. If you add up those changes per year, it adds up to 34%, but if you look at the bottom number versus the top number, it's 39.5%. So you can't take that per year change and add them up. You have to look at the two numbers you're actually comparing. $301,600, divide that by $216,100, that's a 39.57% increase. Even though the county appraiser says it's 34%, if you add up the individual changes per year, you're not showing the compounding effect of what this would do. Here's Zillow, okay, on my very same house. By the way, Zillow is pretty darn accurate. They tout about a plus or minus 2% error on fair market value. They're actually quite good. There's going to be some outliers among them as well, but generally speaking, they're more accurate than the county is. I don't know why. But that's my house. That, again, it's gone up over the years. You see that number says it's worth about $340,000 now. This is a website you guys can go to. It's on the treasurer's website, it's on the appraiser's website, it's on the clerk's website. You can get to this numerous places, but if you go to sedgwickcounty.org, my favorite place is to go to the treasurer's tab. It's right on the front page there. If you look at the middle of their narrative, there's a thing called My Local Taxes. You can type in your address and you can see your jurisdictions. You can see your jurisdictions, the mill levy for each jurisdiction, and the total number of tax dollars paid to each jurisdiction. And it shows it to you in a graphical format also, which I think is fantastic. So again, this is my house. It says I'm paying $144.898 mills, $4,628 in property tax. And it breaks it down. Notice the chart there says the green section is USD 260. And the little brown section on the bottom there says USD 260 Rec Commission. I would add those together personally. But notice the county there. The county is right at 20%. 20.6% of that pie is a county budget. The rest of it goes to, so even when you get your tax bill, it says Sedgwick County Treasurer, and you write the check to Sedgwick County, and you give the check to, understand, we're levying taxes for 120 taxing jurisdictions, I think. We levy taxes on their behalf. We give them money over to Derby and to Goddard and to Keachai and to Andale and to the townships. We give the money over to them. So a lot of people get mad at the county because their name's on the logo on the envelope, but reality is we don't keep all that money. We keep in 20% for our budget, and the rest of it goes to other governments, okay? And then on my local taxes, if you do go to that, the bottom chart there shows you how we spend your 20% of your tax dollars in Sedgwick County. Let me just say up front, we have 45 agencies and just about 3,000 employees. And most of our stuff is infrastructure, quality of life, human services, and public safety. The quality of life portion is primarily covered by sales tax. It's about the same number. About $16 million of our stuff we do for quality of life is about $16 million. That's about half of our sales tax revenue. So at the end of the day, your property taxes are covering things like tornado sirens and 911 and Forensic Science Center and the election office and things like that. So it's hard to, most of our budget is non-discretionary. Very few things we do are actually discretionary, okay? Okay, this is my personal tax chart. I made this myself because I like this one better. That's my residence. And the purple there, that's 5 jurisdictions for my schools. I have 5 USD 260 jurisdictions levying money. I'm paying a total of $2,195 to my school. By the way, I have no kids in school. You know how that goes, right? And again, I'm paying just under $1,000 to the county, and I'm paying about $1,500 to the city of Derby. And I got 2 little slivers there. Kansas still charges 1.5 mils for general taxes for the general fund, and then they charge, then I've got a cemetery district as well. The state also levies 20 mils. I put that on the right side this time, 20 mils on behalf of the schools. It's a school levy, but it doesn't go to the state general fund. It goes to schools, but the state levies at 20 mils. Okay? So again, let me just make a point here. Where's most of your tax dollars going? To schools, right? If you don't get a tax notification in the mail, it means you probably didn't have a change. But in case you're worried about that, you can go to the sedgwickcounty.org website and you go to the appraisers tab and type in your address, and you can see whether or not you had an increase or decrease in your property valuation. If you did not get a notice, it's supposed to mean you did not have a change. But you never know, maybe you got lost in the mail. So if you're not sure and you want to go check it out, just go to the website, you'll get to see your address. Okay. I can't talk about county revenues without talking about the state a little bit. This is, on the left-hand side is the all funds budget, on the right-hand side is state general fund. And the all funds budget's blue and the state general fund is red. So state general fund has increased 34% over that 14-year period. And the property tax funds increased 21% over the same period. Just remember that in the back of your head for just a minute, okay? This reminds me of something that Washington might do. This is a lot of growth, okay? The all funds budget, if you can't see those numbers, is going to kiss about $25 billion this year. $25 billion. It's probably going to exceed $10 billion on the state general fund. When I was in the legislature, those numbers were about $5.7 billion in the state general fund and about $11 billion in the all funds. And just since I was gone there in 2014, those numbers have gone up dramatically, okay? Now, this is why I wanted to talk today. This is some of the slides I really wanted to spend some time on. You have your sheet there. Let me point out some stuff here. So, in the 14-year period that's on your sheet, okay, actual expenditures and property tax supported funds are up 21%, much less than the CPI growth of 34%. You can see those on that chart. If you want to see the details there, it's right there in front of you. I know it's hard to read because it's kind of small print there, but the property tax levy is on line 4, and the CPI growth is on line 6, okay? So you can see those numbers. So we've grown less than the rate of inflation. Property insurance costs are up 752%. Software is up 239%. CAPER's up over 100%. Inmate costs are up. Employer health premiums are up. We have grown our FTEs, our full-time equivalent employees, by 3% over that period, 3%. Also, overtime costs are up by 62%. We're having trouble hiring people. And then our reliance on property tax in 2022 was 57%. It was 51% in 2008. What does that mean? We have less sources of revenue. We're less diverse. We're more dependent on one source of revenue. That's property tax. So you wonder why your property taxes are high? There's a hint right there, okay? These next couple of slides are critical. Personal income has gone up by 44%. I already said inflation was up by 34%. Again, personal income went up by 44%, excuse me. And we've increased our employee salaries by 20%. So they're making less than they used to make. And now just in this last year, we've had to make some serious corrections in our pay because we would not have a 911. We would not have an EMS without giving those folks increases in pay. So now we've got a big imbalance to figure out. In the next 2 years, we have a $25 million problem to figure that out. And that's going to be very, very painful. Sedgwick County property tax levies increased by 38% over that 14 years, but we also decreased the mill levy by 6%. So you wonder, why didn't you guys ever lower the mill levy? Well, we did, down by 2 mills, okay? May not seem like a lot, but 2 mills is $12 million in Sedgwick County, okay? Now, the county operates 16 programs on behalf of the state of Kansas, and their support for those programs has gone down 9%. And state aid to these programs decreased, expenditures went down, expenditures went up by 9%, and support from the state has gone down by 31%. So we just spent $12 million of our ARPA funds to help get us through this last couple of years. We may have to do some more of that going forward. We have some more ARPA funds we can use for that to kind of bridge the gap here. But at the end of the day, the expenditures are up and the revenue from the state is down, and these are state mandated programs. Okay, so Sedgwick County taxpayers' support of these programs has increased by 35%. And again, these are state mandated programs, okay? Now, this is a sore topic for a lot of people in the State House. We have 4 programs that they've stopped funding, and in fact, 2 of these programs I voted for. When I was in this, actually, one of them I voted for. The other one passed, I think, in 2006 or 7. It's called the Machine and Equipment Exemption. That means if you have an air compressor or a 5-axis milling machine bolted to the floor of your machine shop, you're not going to pay real property taxes on that because it's just bolted to the floor. It's not really part of the building. So that passed like in 2006 or 2007, and so it lowered the tax burden on businesses. Again, businesses are the machine behind our economy. We've got to have businesses that can thrive, and so that was an effort to get our businesses more competitive. But the mortgage filing fee, I voted for that back when I was there. I think it was 2012 or 13. Bill Meek, God rest his soul, he was opposed to that. He didn't want to change it. Well, it's interesting how much that is. We lost $371 million on the mortgage filing fee issue alone. So had we not changed the law back in 2012, I think it was. It says 2014. Had we not changed the law, we would have $371 million more revenue to Sedgwick County on that one thing alone, okay? And then you look at the LAVTR, and you look at that's Property Tax Reduction Fund, as well as the City and County Revenue Sharing Program. Both of those are based on sales tax from the state of Kansas. They funded one of them, stopped funding one of those in 2001. LAVTR, they stopped funding in 2003. I actually testified on a bill yesterday, Senate Bill 309. They would wipe LAVTR from the books entirely. They've not funded them in over 20 years, so the state's tired of talking about it. They're just going to wipe them from the statutes. But if you add up those $101 million from those 2 programs, plus the mortgage registration fees and the machine and equipment fund, guess how much money we lost altogether? Those 4 things alone in 14 years. In just 14 years, $532 million we didn't get because the state shifted the tax laws. And now they're talking about changing the sales tax on food, and Senate Bill 309 is intended to keep local governments harmless. They will look at our sales tax revenues, and they'll say, well, if you lost revenue last year versus this year, we'll pay you the difference. Well, sales tax revenue is not static. We got $135 million last year from sales tax. We shared most of that with Wichita. We kept $38 million this year. That means $17 million to infrastructure and $17 million to general fund. And I mentioned earlier the quality of life things. We have about $16 million worth of quality of life things. That matches that number pretty nicely. If that piece passes and Senate Bill 248 passes, and we don't collect sales tax on food, then we either have to cut government, which again, many people think that's the right idea, or we have to shift it to property tax. That's another mill of property tax for Sedgwick County and 3 mills for Wichita. So my question would be, would you rather pay 1% sales tax on your food in Sedgwick County and keep your property taxes a little bit lower? Or would you rather go ahead and wipe that sales tax off of food and pay 3 more mills to Wichita or 1 more mill to Sedgwick County? Again, I know we like to cut government, but understand $11 million in their budget is a huge number. And even $6 million in Sedgwick County is a huge number collectively. Just Wichita and Sedgwick County alone is a $17 million cut. So I hope we can absorb it. I don't think we can. Not that this is an important slide, but those are the 16 programs we fund through the state. Okay. On that list, we have things like elections, district attorney, aging appraiser, extension council, emergency management, health department, all that goes. There are a number of things there. Sheriff. If you don't fund the sheriff, they'll take you to court. You got to fund the sheriff. Okay? Now, I'm not going to talk about this. This is a really important slide as well. If you look at that bottom line on your sheet there, on line 28, it says price of government. What that means is total non-governmental revenues, in other words, local taxes collected by the county divided by the total personal income. That means for every $1 of personal income, you're paying 0.843 cents out of that dollar for local government, for Sedgwick County government to do what it does. Less than a penny per dollar. 0.843 cents per dollar. And that number's gone down. If I would argue, back in 2008 there, it was much higher. It was a little over a penny. And it's gone down. It's going to kind of leveled off there. Between 2012 to current, it's pretty leveled off. See there? By the way, this is a calculation you can do for any government. Maybe make an argument that I think this reflects the fact that Sedgwick County is more efficient than we used to be. So you look at all the pressures we're feeling, the economy, things costing more, employees cost more, doing more with less, trying to find efficiencies to cover all these pressures. We've done a pretty good job, and the price of government actually is leveled off. I think that's a pretty good thing. Now, this is, I need to stop for questions, I'm guessing, but I have 4 slides here. I don't really have time to cover this, but let me just make one point here. If I could just show you these 4 slides real quickly. I have a theoretical city here, a theoretical taxing jurisdiction. It's got 20 homes in it. I highlighted the home that's at fair market value. And there's homes that are undervalued and a couple homes that are overvalued. And I calculated, I said if the budget was $60,000, what would have to be the mill levy to calculate for each of these homes to make that $60,000 come into government? And you'll notice that those 20 homes have a different percentage of the government burden. That top one there has the 3.6% of the government burden. Because that's a big number because there's only 20 houses for $60,000. But the bottom one there has a 5.8% burden for the same government. These are supposed to be the same house. But because the appraiser underappraised a lot of them and overpraised a couple, the burden of government is different for each of these taxpayers. So I have a theoretical question for you. If I was to add 20% value to every home on this chart here, what do you think would happen to the percentages of the burden of government? What would happen if I added 20% to every value? It wouldn't change. Let me show you. That's the exact same houses, but I added 20% value to them. And again, the top one is still 3.62% of the government burden, and the bottom was still 5.89% of the government burden, still $60,000 budget. Okay, I didn't change the budget size, it just changed the value of the homes. So when the appraiser comes around and says, hey, your value went up and your value went down, what they're really doing is they're shifting the burden of government from one person to the other. There's 2 parts of this budget. The appraiser does his job, and then government passes a budget. And here's the interesting thing, is when those appraisals come out, I get 1,000 emails. People are almost always really upset. They're angry. Mine went up 60%, mine went up 30%, mine went up 10%, and I'm mad, they're all mad. Because what they don't understand is those tax appraisals are shifting the burden of government between different taxpayers is all it's really doing. Your percentage, the dollars you pay is based on the budget and your fair share based on the appraiser's work, okay? What would happen if I double the budget? Go back to that first slide, but I'm gonna leave up the tax value is the same, but I'm gonna double the budget, okay? I double the budget, guess what? Everybody pays more, but their share is exactly the same. Their share is the same because they go back to the original values. Actually, it doesn't even matter. Their share is exactly the same, but I doubled the budget. Everyone's gonna pay double what they paid before in terms of dollars, but their share is the same share they had before. Does that make, in terms of percentage of the burden of government? And the last one I'll show you is this. If the appraiser goes out there and says, well, this value went up and this value went down and this value went up and this value went down, you're shifting the burden. Again, this is still $60,000, but I changed all the values on the left-hand side. Now those numbers changed. Okay, why is this important? Because when we pass a budget, we have public hearings, and you know what? No one shows up. I had 8 people show up to 2 public hearings last year. 8 people showed up. You know what they said? Spend more money. No one said to cut anything. So people are mad about their property values, but they don't engage the government when we pass a budget. And the budget is divided amongst the taxpayers based on a percentage of property that you have relevant to everybody else in the taxing jurisdiction. That's what these slides are trying to show you. That's a lot. I'm going to stand for questions. I know it's a lot. I said a lot. I got about 10 minutes for questions. All right. Thank you.
So Pachyderm members are going to go first. We only have about 8 minutes, so if you keep your hands up the front of you.
Commissioner, thank you for coming and trying to get through all that. It's a lot to get through, but just in your opinion, if we could make taxes as fair as possible from all the different sources, all the different levels, how would be the best way to go about that?
I love that question. Thank you for the question. So, again, I started off by saying I don't really care what type of taxation because it's all kind of the same to me. But I do believe that if you had a flat tax, a consumption tax, and you got rid of the 50,000 exemptions on sales tax, I would rather see that, because again, what that does, it gives you a lower rate and a broad base. You could Dick Kelsey ran on this. He talked about, lowering the rates and broadening the base, get rid of all those exemptions, and you could actually lower the rates of income tax and property tax at the same time. That's a pretty good idea, actually, but you know what they said? Dick Kelsey wants to raise tax on churches, and he got himself unelected. Okay? Because they'll cherry pick the message out of that. So, look, I think a flat tax is best. I don't like progressive taxes. Income taxes are progressive by nature. And sales tax, because of exemptions, actually become progressive. Property taxes, again, are the flattest of the three, but we hate them. But part of me says, you know what? I don't mind them as much personally, because at least I know what I'm paying for government. And I can hold those guys accountable because I know what's going on. They can't hide behind tax collections that are basically kind of shady. Okay, I know what they're taking out of my pocket, and I can feel it, and I hate it. I hold them accountable. So part of me just says, if we went to a consumption tax, I think it's flatter and better that way. But I fear the fact that we don't know what's going on. We grow our government basically and have no idea what's going on.
All right.
I was fascinated when you said Sedgwick County is efficient. I found that to be true over the years compared to Wichita. What is the total Sedgwick County budget? And can you give us the Wichita and public school budget?
So if I understand correctly, I think Sedgwick County right now, by the way, we have the second lowest mill levy in the state out of 105 counties. Johnson County is the better one, but guess what? Not only do they have a lot of assessed value, they also levy 1.7 cents sales tax. Okay, so they've got more revenue. They have $200 million from sales tax alone. So I'm not surprised that Johnson County has a $1.6 billion budget. We have about a $550 million budget. Wichita's about, Jeff, correct me if I'm wrong, $650 roughly $million budget. It's about $650. And 259, I looked it up yesterday, average cost per pupil in USD 259 is over $19,000 now. They have over $1 billion budget for less than 50,000 students. Over $1 billion, like a $1.1 billion budget for USD 259 now. So they take it's out of control. Thank you for the question. Yeah.
I'll try to be civil, not pissed.
I'm sorry.
I was struggling with my property taxes. I didn't know where it was gonna come from this year. You say business don't pay taxes. Well, no, they don't. And I do. I pay the property taxes for my business. I've never had enough money out of my business to pay for it. It doesn't make enough money to do that. And now I get a 37% increase in my property taxes. I don't know where it's gonna come from. I'm out of business. Might as well pick up your signs and go out, because I don't have it anymore. I'm out of this. I don't want this anymore. I can't stand it, I can't take it, and I don't want to have the burden for a 1 million square foot building going in there. They're not gonna pay property taxes for 10 years. What the hell are you gonna do about it?
Okay, so let's back up what you said. What I did say was businesses don't pay taxes, their consumers do. They sell goods and services to their consumers who have to cover the cost for businesses. I mean, as a business owner, if you cover that yourself and don't pass that on to your consumers, then yeah, you're not going to stay in business. I get that. You're right about that. What you're talking about, I think, is the Integra announcement about $1 billion facility out, a multi-billion-dollar facility out by Bel Air. And it's a $1 million facility to start out. They are getting, I believe, 10 years in IRBs and then 10 years in TIF support, and then after that it goes to the public for property taxes. I'll just say this, there is a but for. Again, when you look at economic development, I know that we can all disagree on whether that's real or not, but without those things on the table, they would not come to Wichita or Bel Air. So we have, we're talking about thousands of jobs average wage is $61,000. We're talking about building homes. We're talking about them paying income taxes and sales taxes and property taxes, those homeowners. Talking about people who are right now underemployed. Integra is going to send buses throughout, 5 buses throughout the city to pick up people to fill these jobs. They provide 100% of the training for someone who has nothing other than a GED to land one of these $61,000 jobs. If you want this in your community, again, we have to compete with other communities. And by the way, it's not done yet. They have not awarded it to Wichita or to Sedgwick County yet. But at the end of the day, if you want to be competitive in luring them to Sedgwick County for the things I just described a minute ago, eventually they will pay property taxes. You're right. There's going to be 20 years where they're not going to pay. Well, I'll take that back. 10 years, no property taxes, and 10 years of taxes they'll pay are going to cover the infrastructure around the facility. So they will pay property taxes the second 10 years. So it's 10 years of IRBs. That's a tax abatement, and then that's for schools, and for City of Bel Air, and for the county, all 3, and for the fire district, by the way. And then the second 10 years, they'll pay property taxes that goes and covers the bonds, that pays for the infrastructure. Then after the 20 years, it goes on the government dole, and they'll pay property taxes like every other business. So the question is that the right thing to do? And again, there's a but for. If you but for this incentive, they will not come. So that's a hard vote. I get it. It's a hard vote. But I believe it, and I think even though they're not going to pay property taxes, the other taxes that come into the community, there's like a 3-to-1 ratio. There's 3 jobs in the community for every 1 job that they create. So the net amount of housing and income taxes and property taxes and sales taxes paid by all that economic activity is going to really be great to the community. By the way, our total input right now, other than tax revenue loss in the future, is a $500,000 commitment for training. That's over 5 years, $100,000 a year for 5 years. That's what we had to put in on the table. So I think that's a pretty good deal for Sedgwick County.
Would you support a warranty or a guarantee that the county will reduce your property tax if you listed it on the open market for 90 days and it did not sell? Your guarantee to the taxpayer would be, we will lower your assessment by 10%. You give it a fair market opportunity and it fails to get any takers, you get 10% off your property. That's called the proof is in the pudding.
So you're suggesting, though, let me just elaborate on the question. So you're suggesting you would list it for less than what the appraiser says it's worth. You're listing it below what the appraiser says. At the appraised value. Okay. So you haven't proven that it's, again, what you have to prove is it's overvalued. If it hasn't sold, that doesn't necessarily mean that it's overvalued. I mean, if you listed it below what the appraiser said, and it did not pass, I can see your point. But let's be real clear about one point here. The appraiser and the rules for property valuation come under PVD, under KDOR, according to the statutes of the state of Kansas. The county has no control over that. I get your point. And, they've tried some things, like they'll say, well, if you make an appeal, then the appraiser can't raise the value for 2 years. That got thrown out by the courts. Okay? Then they said, well, how about you can ignore maintenance, normal maintenance. If you paint the house, it shouldn't increase the value. I'll tell you what happened, and Jeff and I talked about this just the other day. But they will look at every property as if it just has a brand new paint job and a brand new roof. So at the end of the day, it's really hard to understand the unintended consequences of what we do in statute. They have a responsibility to fairly appraise properties, and if you put these rules on them, I don't know if it always works out in the favor. But again, I see the point you're making. I get that. I think that's a reasonable thing. The question is, if you have a certified appraiser come in and they show that this house would be, on the fair market would be this, they'll reject that. They will not accept that. But if you actually do sell the house, actually have a sales, they can bring that in. That's evidence. And they can reset the value based on an actual sale. By the way, they get copies of your actual sales anyway. When you sell a property, one of the documents you have to fill out and sign goes to the appraiser. And they keep a record of every house that's ever sold.
Jim, we have time for one.
All right, thank you. One more question, thank you.
Your numbers all are very interesting, and to me as an accountant, somewhat understand it. But government's the most inefficient entity there is. And you've not mentioned anything about how we make our local government more efficient. Any ideas?
Yeah, I'll try to give a quick answer. So, the state's been on, has done everything they can to squeeze revenue out of local government, so we're essentially starving the beast. I don't know where the inefficiencies are. We entertain grants from the federal government. It just drives me crazy. There's so much money from federal government coming in for stuff we can't even imagine what we're going to use it for. I mean, just they come up with new ideas on how to spend money constantly. We don't grant out money. We generally consume the money that we get into the county, and I'm always looking for ways to save money. And there are some things we do that we've cut out of our spending, but they're really small things. They're not huge issues. I can't really find millions of dollars of inefficiency in the county. Some governments, maybe they're different. But at the end of the day, I think it is upon the voters to hold us accountable. Let me just say it that way. I think as an elected official, I look at my jurisdiction, Sedgwick County government. I actually do think it's quite efficient. But if I'm wrong, please, as the voters, tell me where we're inefficient. Help me find ways to cut the government. I beg you. I implore you, help us find ways to cut. But as I ask those questions, in year after year after year of budget hearings, rarely, almost never, has someone said, please cut this. They want more government. So the insanity of government, and I think it's federal government gets us messed up thinking. They said, we want to pay no money in taxes and we have all kinds of services for free. It's insanity. You can't get it that way. So in county government, you actually get what you pay for, and we don't want to waste the money. But if you want services, you got to pay for them. We don't make up money out of thin air like the federal government does. At the end of the day, I ask the voters to help us find those efficiencies, and I would love to have that help. Thank you.
Thank you, Jim Howell. All right, have a good weekend, everybody.